A lot of news coming in on the Bybit hack today. We're going to break it all down for you. Don't miss it. My name is Paul Barron. Welcome back into TechPath. Let's get started. I do want to thank our sponsor today, and that is Coinbase. This is a great place for you to not get hacked. It's actually a good place for you to start your crypto journey. And the cool thing is Coinbase has not been in those kind of scenarios so far. So we've seen a good record over on Coinbase. The future of money is here. You can get into whether you're a personal or even a business account. You can start $200 to get started in crypto, and this is a place for you guys to go. I think this, obviously, if you're in the U.S., a great service out there. So check it out, Coinbase.com. Let's go over to a couple of points I want to hit on, and this is kind of the history of what we've seen. Bybit hits a $1.5 billion, by far. That's the largest hack, financial hack, in the history of all financial crime. There has been one other hack that occurred back in 2015 in a European bank, but it was done through like 30 different bank infrastructure, and they got over $1 billion, but nothing even close on that. Mt. Gox 2011, 647,000 Bitcoin, about 470 million at the time. Bitfinex, of course, in 16. CoinChet, FTX was 415 million. KuCoin, WazirX, which we showed last year, 235 million. And then Quadriga, and then, of course, Coinbean and Femex also just happened here in 2025 at 69 million. So as you can see, these are continuous problems that occur. The key is how do these companies respond to these things? And with Bybit, they did a pretty good job, I think, in being able to respond to it. And if you look at this is a pretty good assessment. If a bank were to be hacked of 1.4 billion, you'd see a freeze of withdrawals. Government would be involved, set up inquiry commission. Right now, you'd probably see bank runs going like crazy. Branches would be closed. Competitors would be getting an advantage. I mean, it'd be crazy. Bybit gets theirs done. CEO went live. The industry kind of united to assist on some liquidity. Competitors, really started to show. And I think that's the thing with crypto. It shows a consistent support in the community itself. The industry itself is tracking and freezing. That's the beautiful thing about crypto, is that they were able to track this down almost immediately, and zero withdrawals were pending. So that's another big advantage. Very good. If you look at this, it's a bullish move overall for the industry. Now, there's a lot of people that have pointed to a lot of different variations of how this may play out, but Bybit, of course, has made an announcement, and they're almost back to 100% on their ETH reserves, and the deposits and withdrawals are back to normal. So kudos for what they're doing there. But again, they did a good job on damage control. I think Ben's, going on a couple of YouTube shows, and also just the live stream was, I think, a good move in general. Because remember, you got to remember your audience. You have to speak to the audience where they are, go to where they live. And I think this was a good move overall. I was listening to some of the interviews with Ben from Bybit, and a couple of things I look at is, first of all, kudos to them. Their security layers were pretty advanced. And that, I think, is the very bare minimum that you should have in place for crypto, just because of its nature of digital money and how easy it's going to be. And remember, you have to look at a lot of these organizations, including these centralized exchanges, are just getting into the cycle of security. So having a full-on security and forensics team, this is a thing that I would say I'm a little surprised that we don't have in a company the size of Bybit. Even though you got ZachXBT out there doing a lot of on-chain forensics, the likelihood is that you should have a team of ZachXBTs in every major exchange out there being able to do this. One, looking for vulnerabilities, and two, being able to seize the moment in case a hack does occur, so that you can go out there and possibly freeze wallets, etc. Other things that were going out there that is a little bit concerning is that Binance is now beginning to sell huge amounts of ETH and Solana. And of course, we've seen Solana's market start to plunge. We're down around 150 right now, which is pretty much erased the entire Trump bump. And a lot of it is coming from what's going on right now out of Binance. There are other things. Yes, there's some scenarios that are going to be playing out here in March in terms of just reclaims. And I think what we're going to see in a very short period of time with Solana is either a bounce, or we're going to see this maybe make its way back down to $100. I don't know. Let me know down in the comments of where you think Solana is going to be going from here. I want to play a clip for you guys, because this is going to get into what will it, first of all, what was the statement of where traditional finance was because they're looking in on what's happening with the Binance deal or the Bybit deal. And I think this is a good statement from Pomp on what this means to crypto. Take a look.
Well, look, anytime that you have a hack, people obviously get worried about this. But the way that I describe it, the Treasury and the Fed has never been hacked. The further you get away from the creation of the money point, then you get less secure. Banks have been hacked, armored cars have been hacked, or people have had money stolen from their wallet. Same thing in crypto. The blockchain itself, the Bitcoin blockchain has never been hacked, but if you go and you take that and you put it in an exchange or you put it in some sort of custody solution, those can get hacked. And so I think it's important to pay attention to. The most impressive part to me, though, was this was a $1.4, $1.5 billion hack. Customers obviously were worried. They ran to the exchange. They withdrew $4 billion, no problem. And so obviously the exchange had the money. Right. Usually what we've seen is when these things happen, the exchange gets caught, not having the money or there's some sort of issue. But I think that really the system kind of worked how it was supposed to, and now they're going to work to try to recover that $1.4 billion that was taken from them.
The other thing that was kind of interesting was when you listen to Ben, his statements of how all this occurred, it was pretty sophisticated in terms of how the North Korean hackers did it. Almost creating a new interface, meaning, think of it this way, almost like a skimmer on, you guys have probably seen this, but imagine if you logged into your bank account and it looked just like your bank account, had all the kind of narratives, even a test run of deposits or an ACH, and that goes through, and yet at the same time, it is essentially the hackers themselves. That's how sophisticated we're getting here. So I anticipate that we're going to see a lot more security starting to build up inside these exchanges now. I think it's just a matter of time before we start to see whether it's forensic teams or anti-hacking white hat hacker teams being built inside these exchanges, because this is going to be a scenario that I think plays out in more than just crypto exchanges, but when we get into real world assets, all sorts of assets that could play into this. Now you take that being said of what's been going on with Bybit, and then you kind of question a few things. Here's Marty Party. Here's what he said. This was no hack. It's all a narrative to hide the biggest corruption in centralized exchange history involving all major exchanges and their leveraged positions on ETH. Now that's a statement that no proof behind this, but the point is that this creates a very interesting narrative because crypto does seem to stick together, as we've already shown. Could this even be a potential of where there was some nefarious activity that may have been from who knows where? Now let's talk about Fed rate cuts. Pomp goes in and they talk about Fed rate cuts. What's it going to take to get this market charged back up again? Or are we in the beginning of a bear market? Take a look.
If the Fed doesn't cut this year, and when it looks like it isn't, that's why you supposedly own things like gold and Bitcoin because of inflation. So, yeah. and then Bitcoin goes down.
To a point. Now, the other thing I'm paying attention to is this idea that's being popularized by Jim Bianco, which is the Mar-a-Lago Accord. And basically the idea is that the dollar's too strong, and instead what we're going to use is we're going to use tariffs, we're going to go and we're going to use the sovereign wealth fund, and then we're also going to get payment for security. Those three things, the general idea is to reduce the debt, get interest rates down, and weaken the dollar. If you're able to do that, I think that would be very good for Bitcoin and for stocks.
All right, so that's an interesting statement because to what he's talking about, Jim Bianco, we've had him on the show before, and I've listened to his theory about the Mar-a-Lago Accord, and I would agree to a certain extent. The idea behind it, when you look at the infrastructure, it's going to take some time to construct that. And that means possibly through summer, which could also orchestrate a possible adjustment, not only in the Fed funds rate, but also inflation in general. But there are going to be some scenarios where we do see, if this does come to pass, where we would see a weaker dollar. And if that does occur, risk assets will, of course, be the beneficiary of that. So it's really more of a longer play here. And it goes back to, if you look at some of the other analysts that we've had on before, talking about the extension. We just had Raul Powell on the other day. He was talking about the extension of this bull run possibly into 2026. You look at Tom Lee, also looking at later in the year. Many people starting to look at a longer bull cycle and a reclaim of what we could see based on what the inflation situation that we're dealing with right now. All right, with that being said, you look at a couple other things that are playing out right here. U.S. CPI inflation is on track to hit 4.6 over the next 6 months. That's, again, if it stays on track at the current rate of increase. But the CPI inflation has averaged 0.4 per month over the month basis over the last 3 months. So if it holds that position, we'd see at 4.6. Would be insane to hold that, because that's double the rate of the Fed's 2% inflation target, which is another factor. This, again, back to what Pomp was talking about, would freeze any kind of Fed rate cuts. So we would see either no rate cuts at all or possibly a rate increase, which would be the scenario that could play out in this. So you have to look at that and what that could be to the market. Other things that are considerable and under consideration for kind of analyzing where the market's going is you look at the government, the funding situation in terms of a lapse. If we don't get the federal government funded, and this would happen around March 15th, it's a 75% chance right now that this is going to stop. In other words, the government will shut down. If that goes, yes, there's a lot of negotiating going on back and forth kind of in the halls of D.C., but this will be a big factor that would be bad for Donald Trump's administration, so we'll see. Warning, U.S. stock market reaches the most overvalued level in history. We continue to see a little bit of this over-evaluation. If you look at the last time we saw some of these, we're at 99. If you weren't around then, that was a big, huge bomb scenario. We had almost 7 trillion wiped off the books, many of which came out of the Silicon Valley fails of many tech companies. You know, and then we saw kind of those big bumps in between that, 2008, the last financial crisis, all the way back into the 80s. So there's been some interesting highs and lows. We are at one right now. Now the question is does it hold on to these charts and stay with a potential to lose that? Other things that are happening right now, which is a little bit concerning on Bitcoin's front, is that Montana, North Dakota, and Wyoming have all rejected the strategic Bitcoin bills for reserves based on volatility concerns. And that's an issue because if we see more states start to bail out of that, I know we had Dennis Porter on not too long ago, probably a good idea to get him back on because I wonder if this starts to break down across other states, what kind of impact could this have on Bitcoin overall? Now, those are all the bearish things. Let's look on the bullish front here because there's still a lot that is very bullish in the market. Bull market peak indicators, if you look at these on selling the top right now, the hold position is 100% right now on hold position. And if you look at all the references in here, the Bitcoin rainbow chart, days of net ETH outflows, none of these have hit. So when you look at this chart, you'll see right there, those X's right there, 2-year multiplier, the Bitcoin bubble index is not hit, USDT flexible savings not hit, RSI is the 22-day, Bitcoin dominance, all of these not hit. So are we in a very predictable but unusual bear market where we see these highs and lows and then this retracement into some of these altcoins? Solana, of course, is the biggest one where it's plunged to its lowest price since October. And of course, this has been because I think some of the negative press that Solana has had because of the meme coin scenarios. We saw, of course, the Libra fiasco last week. Then, of course, the Bybit thing comes and has nothing to do with Solana, but a lot of the liquidations have been kind of cycling in through Solana, which has created another little problem going to the market. The other bullish things on this could be that we're continuing to see the SEC really piling in on very positive administration potential comparisons as the task force goes to work. When you dive into what they were meeting on, obviously you've got Saylor in there, which is the Bitcoin maxi, and for him to go out there and do this in more of a overall approach on digital assets framework is pretty significant because it's good for digital assets as a whole. But I think the scenario is that a lot of the details they're getting into are potentially the scenario that plays out in terms of the SEC restructuring their digital assets approach. All of this very, very popular and I think very bullish for crypto in general. All right, let's jump to this tweet right here. This is where Robinhood's situation completely got dropped with the SEC. So the case is there's going to be no enforcement. This is really good news for Robinhood. I think it's also very good for the market. If you compare this to what happened last Friday with Coinbase also being dropped, also very, very bullish overall. The other point that I want to make too is if you look at the newfound interest in staking potential here, this would be the next logical would be to reconsider the lawsuit against Consensys, ETH. So this again would be very, very positive for Ethereum. And I think also just the general crypto market as a whole. So we're going to watch that one very closely as things start to brew there with the SEC. $64 billion asset manager Citadel now is going to be offering crypto trading. So they're going head to head with Fidelity. This will be good. And it also normalizes crypto into the normies, where people that are in Citadel, they'll have the chance to now be able to trade, just like with Fidelity. I'm kind of curious, for those of you that are out there that may have Fidelity accounts, have you ever bought Bitcoin or Ethereum in Fidelity? Let me know down in the comments. I'm kind of curious because we see the traditional route to crypto, but there are other routes into crypto that are in the TradFi lane. So Citadel now going to be one of those. Kobe Saylor, these are the events this week that you need to watch out for. You've got the consumer confidence data coming out on Tuesday. The big data is, well, NVIDIA is a big one. Wednesday, we'll see reports and their earnings coming out. I also think the scenario with the PCE inflation data on Friday is going to be a very key data point to watch. So be watching for that one. And then we have 10 Fed speaker events this week. So there's going to be all sorts of news most likely coming out of DC. All right, we will get to you guys on all that. We've got a big lineup of interviews this week and a lot more coming for you. If you're not in the Diamond Circle, get in right now. It's a great place to get initial content. And join me out there on X. It's just @Paul Barron. We'll catch you next time right here on TechPath.